Hello, everyone, and welcome to the Sustainable Finance Podcast. My name is Paul Ellis, and I'm your host for these programs about developments in this fast-growing industry. The need for convergence and harmonization of ESG frameworks and metrics across industries and regions has become critical in today's marketplace landscape. Laura Callaghan, Associate Director of ESG Services at Novata, is my podcast guest today, and she's going to take us behind the scenes into the service team's critical role in moving Novata beyond the sustainable investment industry perception that this is just a technology platform. We will explore the ESG convergence initiatives and frameworks that are key for market transparency and what barriers exist in achieving this convergence. Hello, Laura, and welcome to the Sustainable Finance Podcast.
Hi, Paul. Great to be here.
We're very glad you could join us from London this morning, right?
And sunny London today.
Good. I'm glad it's sunny there. We're going to kick off the questions right away and begin with, what is ESG convergence or interoperability? Did I pronounce that correctly?
You did. It's a bit of a mouthful, but it's a word that I'm using almost every day at the moment. Interoperability is essentially a way of mapping different frameworks, different regulations, different standards, and even down to the granularity of different metrics, and figuring out how they map to each other. Where are the similarities? Where are the differences? And ultimately, from a business perspective, it's really figuring out where those crossovers are to avoid duplication and effort.
Okay. So now, why is there a need for ESG metric convergence, and what are the main obstacles to achieving it?
Great question. So environmental, social governance, ESG metrics have become more and more popular over the last, I'd say, 2 decades. The term ESG was first coined in 2005 by the United Nations in a white paper that was called Who Cares Wins. And I think the word cares is something that we really need to be thinking about when it comes to figuring out what interoperability and convergence really means, because the challenge is often, what do businesses care about? What do stakeholders care about? And the term we often use is materiality. So what's material to the business? What's material to the stakeholders? And so with convergence, it's often very difficult because people often want to use a standardized framework or something that will help them reduce the number of metrics or data points that they want to collect. But it's also really important to collect metrics and information that's material. And often those pieces around materiality may not always be included in one framework or regulation. And so you have to look elsewhere and combine different ones to make sure that you're reporting the information that's most meaningful to you.
Okay, well, listen, I want you to know that you're in good company on the Sustainable Finance Podcast, because the author of that paper, Who Cares Wins, Georg Kell, is a former guest of ours as well. So
amazing.
Here's my next question. How long do we have to go to achieve this ESG convergence or interoperability? It seems like we've been working on it, as you said now, since 2005. What does the near-term future look like?
Yeah, unfortunately not the bearer of good news. I think we've still got a long way to go before we really hit that point of having a standardized, international, globally accepted framework. We've seen in recent years specific frameworks like the Task Force on Climate-Related Financial Disclosure gain a lot of popularity in countries like the UK and Europe. And those 4 pillars, which are defined as governance, strategy, risk management, and metrics and targets, have now been adopted into broader frameworks, such as those that have been developed by the International Sustainability Standards Board, and also more recently, the Corporate Sustainability Reporting Directive, the CSRD, which is a European regulation that's being rolled out at the moment. Now, with those frameworks and those regulations, there have been quite a lot of interoperability mappings, and you can find some really useful resources online around how things like the CSRD and the ISSB map to things like the Global Reporting Initiative, map to the TCFD. And so we have all of these mapping documents available, but there's definitely no one-size-fits-all approach to ESG convergence at the moment. But the demand for something to exist is still there, particularly from an investment community. We have what's known as the Sustainable Finance Disclosure Regulation, the SFDR. That's making some headway. But there's still some debates around how meaningful that data is, because it's often so broad and it's not hitting that nail on the head that I mentioned around materiality. So there's still some work to go.
Okay, now you've mentioned a number of the standard-setting bodies, and what about regulators and industry associations? What role are they playing in promoting ESG metric convergence?
Great question. So in recent years, LPs have actually got together, a number of LPs have got together to develop what's known as the EDCI, so the ESG Data Convergence Initiative. That's a voluntary framework which private equity firms can collect data across their portfolio companies for every year. And it covers metrics from things like your scope 1, 2, and 3 carbon emissions through to health and safety statistics as well. So it's covering a range of environmental and social governance metrics. I think there are maybe between 16 and 20 metrics. So it's really more of a starter pack. It's something that you can just begin with. If you're brand new to ESG, you don't know where to begin. And those metrics are also sector agnostic. So they're essentially things that you should want to collect no matter what sectors you may invest in or what sectors you may operate within. So that's a voluntary framework that's gaining quite a lot of traction, quite a lot of popularity. And you can officially submit to that every April. So every year in April, you can officially submit to that and also gain a benchmark of how you compare with peers. From a regulatory perspective, the other two that I'd mentioned, the Corporate Sustainability Reporting Directive, so the CSRD, that's mainly aimed at companies. So that's essentially trying to establish a baseline for how companies can start to standardize sustainability reporting. And that really hones in on things like materiality. So you have to do what's called a double materiality assessment. So you have to figure out what's important to you as a business, but also what's important to the people and the planet from a business perspective. So, for example, if you take the topic of climate change, how is climate change impacting your business or how could it impact your business in the future? And vice versa, how is your company impacting climate change and how could your business either mitigate that or make moves to change that in the future? And so with that interoperability piece, once you've done your double materiality assessment, you should then gain a set of metrics and data points that are important to your sector, important to your business, but they're aligned to a standard of some sort to help you communicate all of this information to your core stakeholders.
So now we've got regulators, we've got standards, and now we've got to figure out how the regulations and the standards overlap or converge to help reduce the burden on GPs and portfolio companies. Is that correct?
That is correct, yeah. So it's really making sure that you're aligning to things that may be on a voluntary basis if you think that they're useful, if the metrics that are included in that standard are meaningful to you and they're going to help you either work with portfolio companies to improve their performance or just to start identifying what trends and patterns exist with the data. But then also you have to obviously comply with regulations. So it's difficult to figure out how to balance the two from a voluntary and a mandatory perspective.
Now we're moving on to the investors who ultimately have to make the choice between various ESG frameworks and standard setters to ensure the consistency of their data. Tell us how Novata interfaces with companies in order to support their ambitions around following the right path for ESG data.
Great question. So we have a dedicated metrics and regulations team at Novata. So they're always having to keep abreast of what's new, what's up and coming, Also, from a regional perspective, we're very, very conscious that different regions, particularly those in Asia, APAC region, Australia now, are all bringing out their own standards, which are a slight tweak on things like the International Sustainability Standards Board or the Task Force on Climate-Related Financial Disclosures. So we have a dedicated team of people that are always keeping an eye on what's going on, not just internationally, but also from a localized and regional perspective. We have a huge metric library. I actually forget how many thousands of metrics we have now because it feels like we're adding to them almost every week. But we have a standardized set of metrics. So we try and avoid our clients using things like custom metrics. We do offer flexibility with collecting custom metrics if they really want to, but we're really trying to steer the direction of standardization. And with that standardization, by using Novata metrics, our customers also get access to our benchmarks. So we have over 400 universal benchmarks, and a lot of our customers use those to establish how their portfolio companies are performing, whether it be from a sector perspective, geographical perspective, size, and that's really helping to inform a lot of decisions that investors make when it comes to figuring out how to improve and how to really embed ESG into their stewardship for portfolio companies.
So, Laura, if I'm running an entrepreneurial private market platform and trying to sort out these ESG and other reporting issues, how am I going to wade through 400 indexes to help support that effort? There's all types of interoperability going on and convergence that both general partners and portfolio companies in the private equity and VC markets are already dealing with. Are we putting too much on their plate, do you think, or are they going to be able to manage this with the support of organizations like Novada?
Yeah, I was about to say, hopefully you won't be the one wading through them all. It will be me and my team.
It's not going to be me, I promise you that.
Yeah, no, absolutely. That is what my team's all about. So we're a team of ESG experts, carbon specialists. We all have a specialism in some area or not within the ESG space. And we essentially do that work for you. So we'll figure out, what do we really need to build for you from a data strategy perspective? The obvious starting point is obviously regulation. So what current regulations do you need to comply with? What do your portfolio companies need to comply with? But also what's coming up. Having a future-proof data strategy is really important. So we encourage all of our customers to think about what's coming up next, what's just not what is in the realm of current frameworks and regulations. So as a starting point, I think figuring out what regulations apply or could apply is a really important step, but also figuring out what your strategy is. What is your success criteria? How do you want to use the data? Nobody wants to be collecting data for collecting data's sake. We want to be able to tell ESG stories. We want to be able to demonstrate that there have been value creations or improvements across the investment lifecycle. And so we would work with our customers right at the beginning to figure out what their success criteria is and how we can build that into the data strategy as well. So the wading through all the regulations and the frameworks is definitely something we do. We don't put that pressure on customers because that would be a bit of a tough gig.
Yeah. Well, there's multiple implications regarding any kind of standardization, whether it's ESG reporting or other types of reporting, for corporate disclosure practices. So really what we're talking about is the implications of standardized ESG reporting for corporate disclosure practices and how they engage with investors from that perspective.
Yeah, so a lot of the time, the information that investors are asking for is obviously for an investor's needs. So figuring out how companies are performing, what risks may exist, and also what opportunities could be leveraged. But I think it's also really important to acknowledge that a lot of the time, companies themselves want to collect their own ESG data to either inform their performance, to engage their workforce, or to even communicate with broader stakeholders that go beyond investors. So common ones we see here at Novata when we're working directly with private companies is that they really want to be able to tell an ESG story, not just to their investors, but also to their customers. And they really want to be able to gather that information from their suppliers so that they can make more informed decisions about which suppliers they engage with, how they may incorporate this into things like their supplier code of conduct. And then when things like contractings are coming up for renewal, they have a really clear set of ESG data that they can be informed by. So from a corporate perspective, I think there's often a huge set of pressure for companies to provide ESG information to investors, especially when it comes to things like submission dates that investors have to comply with, like the SFDR. The deadline for that is in June every year. But they may also be voluntarily aligning to things like the EDCI, which is in April. So you can see figuring out when to ask for all of this data from an investor perspective is really important, because you don't want to have the companies feeling fatigued from the amount of data requests that are being sent. But then also at the same time, I think it's important to really realize that companies themselves want to collect this data. And so giving them the space, giving them the time, and the resource and the support for them to collect their own data is just as important an implication as investors also asking for that information too.
Okay. Now, of course, this is a very important election year, not just in the U.S., but in many countries around the world. What are the implications of all of the political aspects of how corporations get affected when, their political framework shifts and changes within a particular country or in a region? Are those important considerations around the way data is gathered, how it's measured, and how companies use it?
100%. It's all eyes on the elections this year. There's definitely lots of things that are coming up on the horizon, and it could steer the face of ESG and even just broader sustainability development into all sorts of different ways. From a company perspective, there are certain things that I just don't think are going away. These things are, for example, net zero goals that have been set. So we know over 146 countries around the world have stated that there is a climate emergency, that this is a topic that we need to be addressing now. And so things like that, where we have really obvious targets in place, like net zero targets. We have in the EU what's known as the Green Deal. So that's all about moving capital into greener, more sustainable, healthier, fairer industries. And so I don't see some of those commitments being impacted by the elections. But certainly if we turn our eye to the US, we know that the climate regulation that has been kind of spoken about for what seems like years now is still maybe just being put on the back burner slightly. And so depending how things go at the end of the year, we could expect certain things to be postponed. But again, with elections happening every 4 to 6 years, often in most countries, I think we will start to see things just continually shift. And a lot of that also comes from demands from individuals, just wanting to have more information, more transparency. A lot of consumers want to be able to make more informed and ethical decisions. And so from a business resilience perspective, I think naturally they will still always have to be providing a lot of this information just to make sure that the business is keeping up to track and up to date with what consumers are asking for, regardless of which way the regulations go.
Okay, now, Katie just told us when we first got online today that your new APAC office is opening or has already opened. Now, what are the regional implications related to all of these subtopics that we've been discussing today? Obviously, there is some difference in flexibility. How does a company like Novata have to adjust depending on where your teams are working and the companies that they're working with?
Yeah, brilliant question. We're very happy to announce we have opened our Singapore office just a couple of weeks ago. So we now have a presence within the APAC region. Regional interoperability is a really interesting one. And I do find more often than not, from a geographical perspective, the same types of topics come up as being important. So often carbon emissions. So as I mentioned, with all the net zero goals internationally, I think we're all on the same page that collecting carbon data and informing things like a decarbonisation strategy is just something that most countries will start to incorporate either into law or into voluntary frameworks that are encouraged for businesses to undertake. So we have a lot of common topics, like I said, with carbon emissions, informing decarbonisation strategies, but also similar trends when it comes to social issues. So we're seeing a huge movement, particularly in Europe at the moment, around human rights regulations that are coming in. So the Corporate Sustainability Due Diligence Directive, another acronym is the CSDDD or the CS3D. That's all about supply chain management. It's all about human rights. And I think we're really starting to acknowledge that in the past, we really haven't had that many human rights laws or regulations in place globally. And particularly from an APAC perspective, there's going to be a lot of pressure on businesses and particularly suppliers to provide this information to European countries that are going to have to ask for this as part of the CS3D. And so I think naturally being asked for this information and potentially not being able to provide that information for European countries is going to mean that there's a loss of business in these APAC regions. And so for them to keep up, I do think the natural trend is that they're also going to have to start implementing some of these regulations themselves as well.
Laura, there's an awful lot for you and your team to catch up on and stay focused on going forward. And we'll stay in touch with Katie and your team to update and follow what you're doing. And in the meantime, where online can our followers of the Sustainable Finance Podcast, go to learn more about Novada's ESG work in Convergence? And how can they get in touch with you regarding the questions and the topics that we've discussed in today's episode?
Great question. You can always go on the Novata website. So just type in novata.com or type Novata into your search engine, and hopefully with the first one that you'll see. On there, we've got loads of different guides, knowledge-based articles, various different pieces that you can read about. So we have guides specifically on regulations like the SFDR, the CSRD, and we're really trying to get a message across that we need to simplify these. We don't want any complex language. We know the landscape's already complicated, so we're trying to simplify all of this by writing really pragmatic guides. So you can have access to all of that just by looking on the website. You can also reach out directly via the website to speak with any of our experts or to book a demo to see what the platform looks like. And then, of course, feel free to contact me on LinkedIn if you have any more specific questions as well.
Terrific. Well, thanks again, Laura Callaghan of Novada, for sharing your expertise with our followers, who can join me again next week for another episode. I'm Paul Ellis, and this is the Sustainable Finance Podcast.